All right, Ken Orange Theory Trader back with a video just showing you how to build an NR7 watch list. This is part one. You have to understand the structure of what we're looking for, so let's get into it. Now, when price breaks out of an NR7 or an NR4 range, either way, we are looking for open range breakouts over the next 2 to 5 days in the same direction that the breakout occurred. Now, the NR indicator will fire, and that'll mark the beginning of the breakout clock. That'll start from, like if the price breaks out on Monday, Tuesday will be day one, Wednesday, day two, Thursday, etc., etc. Okay. We're not going past 5 days though, because we expect to retrace. If it drops a steady 5 days in a row, we're going to expect to retrace somewhere around those lines. So we're not looking to trade that. Now, when you're looking for your Asian open range breakout or London open range breakout, you are looking for price to break out in the direction of the breakout, and the price has to be outside of the range. And I'll show you this. So lastly, you have to remember that when it comes to taking profit, either at day 5, 3 times I want people to stop. If prices just keeps going. When day 5 gets hit, stop looking for setups. Or if the pair moves 3 to 5 times its average true range from the bottom or top of the breakout range, depending on which direction it's going. So for example, if a pair has an ATR or average daily range of 100 pips in a day, so it moves 100 pips in a day, right, on average, and it has moved 300 pips, it is broken out of the range by like say 300 pips. That's 3 times the ATR. If it reaches that, awesome, take your profit and just be done. Now, the closer price gets to us 3 times ATR, the lower your take profit should be. Obviously, the best entry is going to be on the NR breakout. However, after that, you're just going to be looking for continuations. So let's look and see how this looks. So over here, this yellow box, hopefully you can see that. I know it's kind of light, but this right here is the range. Okay, this is our narrow range, okay, after a 7-day period. The breakout doesn't come until right here, Wednesday at 9 a.m. Price breaks out of the range and the indicator will fire. So this is when the clock starts right here. When that indicator shows up, this says, okay, the trend could be long, no guarantees, could be long for the next 2 to 5 days. So that's Wednesday. So obviously your best entry though is going to be here. But again, right, price did retrace. But here's the deal. This trend is valid as long as the range is holding. Really this range low, right? The range low right here. Or the candle that made the breakout. If its low is holding pretty well, see how I just touched it a little bit here, a little bit, and then shot right back out the range, okay? So either one of those two benchmark you can use your own discretion on that. But typically, you don't like to see price coming back to the candle that made the breakout. That's the most important candle you're going to want to pay attention to, where the indicator is showing. So in terms of our open range breakout, so Wednesday was the initial breakout. Thursday, if you would have taken a long on Thursday right here, see, this is Thursday. Okay, if you would have taken a long on this day, you would have lost. But that doesn't mean that the trend is invalid. So because as you see, it retraced back to this candle's level right here, and then shot right back up. And you had a London open range breakout right here. This was at 7 a.m. So this is the London candle from 3 to 4. Price broke out of it at 7 a.m. and went up 243 pips to this high right there. And then you had one more Sunday going into Monday. That's right here where you had an Asian open range breakout. And it broke out at midnight. Okay, right here where this green candle is, that was the breakout. It retraced a little bit and then shot up and it went up 90 pips. So you had 2 opportunities from the breakout to get a couple of continuation moves. So this is ideally what you're looking for in a long example. Here's one more long example here. We got the NR7 range. Okay, remember the most important candle we look for is the breakout candle. That's this one right here. Okay, so then you're looking for open range breakouts for the next 2 to 5 days, okay, in your direction. Now Monday, and I like this example because Monday there was no trade. Here's Monday right here. Okay, see how there was no long price action? There were no breakouts. This is the Asian high. Price never closed above Asia's high, and price never closed above the London high on Monday. It just went down. That doesn't mean the trend's invalid, but trading the breakout saved the trader here because it didn't happen on this day. The next continuation trade actually didn't come until Tuesday. We had a London open range breakout where it actually broke above. This is the Asia range here and the London range here, this red candle, and price broke above both of them. So that would have been an entry at 9 a.m. and price went up 86 pips. Now, when a new range appears right here, I recommend you just go ahead and stop trading because this is a straight consolidation and it could be ready to break out to the downside. We just don't know. So if the next day ends and you just see another box appear for an NR4 or an NR7, either way, you can go ahead and just cut the trade. Next up, this one here, the breakout occurred Monday at 4 a.m., which is right here. This here, the indicator fired. This is our NR7 range. Okay, price fired right there. And then this gave some great price action to the downside. So Monday going into Tuesday, you had an open range breakout at 10 p.m. right there. London set up right here at 11, so on and so forth. Okay, more breakouts there. A retrace here on Wednesday. And then another London range breakout right here on Thursday, right? So the Monday trade, it went down 134 pips. Tuesday's trade went down 116 pips, and Thursday went down 66 pips, which is right here. This is Thursday, right? And so when a breakout is invalid, remember that the trend is valid as long as the candle that created the breakout is holding. That's this candle right here where the indicator is. Okay, no brainer. Just you want to see the high of this candle holding in this case, or the low of this candle holding in this case. You don't want to see this candle get closed below, right? So it can consolidate around it a little bit, but hopefully you don't see it just get completely taken out. If so, you might want to go ahead and take a small loss. Now in part 2, I'm going to go ahead and build a live watch list with a live chart going into next week, where we're going to be looking at ranges and what day we're on in the possible breakout. So I'll show you that. And so stay tuned for part 2 and we'll go through that. So thanks for watching. See you in part 2.